So this is a perfect segue into financial records. So to keep your financial records, I promise, from experience, you're going to want to keep your financial records as up to date as humanly possible, because for anything like me, you're going to end up at the end of the month with invoice numbers that you used twice, invoice numbers that you skipped, and you're not sure if this person paid or if that person paid. So do your books as it happens. That's like the best recommendation that I can give you. It's really hard. Most people do their books at the end of the month. But for me, if I leave my books at the end of the month, it takes me an entire day because I suck. So another alternative to this, which I should probably convert to pretty soon, is hire a bookkeeper. Just hire a person who has gifts in numbers and give them your bookkeeping stuff. Give them your invoices, give them your receipts, give them your bills. Just like let them do it, and then it'll be nice and legal. It'll make the CRA happy. It'll make your accountant at the end of the year happy. Just keep everybody happy. It'll make you happy too. But since we're here, I will tell you what I have learned. So a bill, that word, means that the client paid you immediately when you provided a service. So that's a bill. So an invoice is like a little bit different. An invoice is like you invoice them and they pay you like later. And invoices, you can have like multiple services on them at once. And so let's say you have like a contract with a big organization, you would invoice them for like the month of services. If you have like one-on-one clients that you've developed a really strong, healthy relationship with, and you know that they're not going to disappear on you, you can even do that with them, where you invoice them for the whole month rather than charging per session. And so immediate cash with services is a bill, delayed cash is an invoice. So the thing with invoices is that you have to track them, and so you have to know if they ever paid you, and you have to like, I'm not very good at that. And it's a really awkward conversation if you ever go into a session and you're like, hey, I don't think you paid me, and they go, yeah, I did. Very embarrassing. It's very embarrassing for you, it's very embarrassing for your client. I've done this, don't do this, it's bad. So yeah, you have to check, you have to know what you're going to accept. Some people, like people like me, should probably only do billing because it's immediate and you don't have to, it's not very hard to track. So you have to know if you're going to accept invoices or just bills, that kind of thing. So back to taxes. Remember that if you go over that $30,000 line in any 12-month period, that you're going to have to get a GST number, and that GST will have to be charged to the client, and you have to track that GST income, and then you're going to have to give that to the government. Sometimes it depends on how much money you're making. You can do it quarterly, and so a quarter is like a quarter of the year, and so then every quarter you would submit that GST money that you made to the government. This is advisable if you are accidentally spending your tax money and you don't have it at the end of the year. But if you have like a separate account and you have all your money in that account for taxes, and you never touch that money, then it's safe and you can like leave it for the whole year. Especially if you're making like a low amount of money, they don't really like, think of the administrative cost for the government to process your GST submission if it's costing them more to process your submission than you actually submitted. So you should probably wait until a whole year. And your accountant or bookkeeper will be able to advise you like what level you're at when you're first starting out. It'll probably just be at the end of the year that you do your GST submission if you've just gone over that 30,000 line. A cool thing with taxes that I didn't really understand, you can donate to charity, and so that's for like your income taxes. If you're making a lot of money and you have to do your income taxes at the end of the year, if you were working for an employer, you're probably used to your taxes coming off of every paycheck, so you don't feel it as much. But when you work privately and you hold that money for the whole year, and then at the end of the year you submit for taxes, it all of a sudden like seems like a really big overwhelming amount. You're like, oh my goodness, I have to pay like $10,000 in taxes. You would have paid that anyways at your employer, it's just you're paying it all at once. A cool thing though is if you have a charity that you love, you can donate some of that money to a charity, and it comes off of your like income level, so you can you don't have to pay it to the government. But if you love to build roads and schools and that kind of stuff, then you can just send it to the government. They're not bad guys, they're keeping the country together. Lots of people villainize taxes, but yeah, so taxes. Oh yeah, so then in your books, so you saw clients, you billed or invoiced them, you got monies, you're tracking it in your books, okay? So we're gonna give you an example of like a bookkeeping Excel table for you to use if you're doing this by yourself. Okay, so income is called debit in accounting, I don't know why, and expenses are called credits. I don't really know why. But anyways, we're gonna talk about expenses now. So when you go over to the local Walmart and you buy something awesome like crayons for your pediatric kit, that's a super easy, obvious expense. So you're gonna wanna you're gonna wanna track it in your books. So I usually have like the receipt number from the receipt, and then I have the the vendor, where did I get it from, like Walmart. What was it? Crayons. What was it for? Pediatric assessment kit. And so that helps your bookkeeper and your accountants at the end of the year, like keep everything straight into the different categories for expense claims. And then like how much was it for? Like, did you have mileage on top of it? That kind of stuff. So that's really the easy part. So then a little bit trickier is mileage. So there's usually a provincial rate that you can follow. I know like for big contract clients, they're gonna want you to use a provincial rate, and the provincial rate changes. And so then you can be within a certain amount of the provincial rate and it's still considered like a fair expense charge. I think in Saskatchewan it's like 10 or 11 cents. You have to be within that of the provincial rate to be qualified as a legitimate expense. So I know for like my personal mileage stuff, I keep it just like at the same rate because that's easy for me. And then for my big client charges, like then I go with the provincial rate. But then you have to be aware of when it changes and you have to change it on your invoices and not forget and not get it mixed up. So that's mileage. Fuel, oil changes, and vehicle maintenance is a little bit trickier and it's like a whole nother level. You don't have to do it if you don't want to, but for the CRA to be happy with this, you have to, they have like a form that I'll attach, like a link to it. You have to track like all of your odometer readings every single time that you get into your vehicle, because then you can work out like a percentage ratio of how much you're using your vehicle for personal and how much you're using for business. And so then whatever that ratio is, let's say like 75% of the time you get into that vehicle for business purposes, then you can claim like 75% of your like oil changes and your car maintenance and that kind of stuff. And then for fuel too, it's kind of tricky, and I don't completely understand it myself. I only do mileage, I don't do fuel because I haven't quite figured out how to do it, but I think it's kind of like the same rule. You can just claim a certain amount of your like annual fuel. I don't know, it'd be something to look into. Talk to your accountant. Figure out a way to make this easy for you. You can take a thing into your car so that you can track all of like, this is the mileage that I did, this is the fuel amounts, keep all your fuel receipts, that kind of stuff. This is a little bit over my head, so I would definitely go talk to your accountant because I don't do it. The next big one is, where do you work? So if you have an actual dedicated office space, this is new for me, it used to be a spare bedroom, very excited. If you have a dedicated office space, you can measure the space and deduct that percentage of your house. So if you have, your house is a certain size, this room is a certain size, how much percentage of the whole house is that thing, right? Then you can claim a certain amount of like your mortgage and your heating, lights, those kind of bills from the space. So cell phone bills and internet bills are a little bit different, and this varies from person to person. So like for me, I only communicate with my clients like on my cell phone. So I get my phone calls from my clients on my cell phone. I check my emails on my cell phone. Like everything communication wise with my clients is like 99% cell phone. So then lots of people would claim like just 100% of their cell phone bill, because without that cell phone, their business does not exist. And then usually that's enough for the CRA to be able to accept that amount from your cell phone bill. So if you're transitioning from and being employed to private practice, then you're not using your cell phone bill 100% of the time for your business. You might use it for other things and more personal stuff, and you're not getting that many phone calls because you're not getting that many clients because you're only doing it part-time. Then I would kind of sit back and kind of reflect and think, well, how much am I actually using my cell phone bill for, and then claim a percentage of the bills. Same thing for internet, like how much are you using that internet for? Like what kind of percentage do you want to claim? You might want to claim a part of it, the same part that you claim for like your office space of your house. You might want to claim that percentage from your internet. But again, the same argument could be made that without that internet, you don't have a business. And so if you're doing like everything out of the house, all of your charting out of the house, and you're always using that internet signal, again, you could claim that internet bill 100% for your business as an expense. A lot of us have continuing competency programs that we have to comply with. So education courses, hooray, business expenses. And so how did you get to the course is an expense. What did you eat while you're at the course is an expense. Where did you sleep while you're at the course is an expense. And then the course itself and any sort of materials you have to purchase for the course, those are all business expenses. So the thing though is that it's still money that you have to spend. Yes, it's an expense. Yes, it comes off of your taxes at the end of the year, but still money that you have to spend. So just be careful with that. They can get very expensive, especially like hotel bills and that kind of stuff, but they are business expenses that you want to track on your books. Smoozing is also considered an expense. So if you have to take a client out for dinner, if you ask them to come out to dinner so you can talk to them about potentially getting like a contract, that kind of thing, those are business expenses, and you're going to want to foot the bill for that. And then you can write it off, so that's really good. I need to do more smoozing, I think. So your homework for this week's episode is to set up your books. We've attached a type in the resource store that you can just go and get and download, and kind of like play with that and figure out like what you want to track or what you don't want to track. Or go out and get yourself a bookkeeper, like I should probably this week go and get myself a bookkeeper and then figure out a system with them. And I truly believe in automation at all costs. And so try to figure out a way to just like easily get your income and expenses to your bookkeeper, or easily work out a system for yourself of keeping your books up to date as much as possible. Or leave it to the end of the month, see how that goes. Maybe you're more talented than I am. Next week is the final episode in our basic training series of how to start a private practice in Canada. It is all about the different business structures in Canada. So we're going to go over those, all the different legal structures. It's going to be very exciting. So we'll hope to see you next week. I'll put in links to our first episode so you can go through this training series. I hope that you've been enjoying yourself. Again, ask any questions or for any clarification if anything is not clear, and we will see you next week.